Hello, today is Saturday, January 18th, 2025, and I'm Jason Shapiro, Market Report. So last year we did a thing that we called Don't Trade a Fade, and we tracked a bunch of portfolios from the beginning of the year to see how they did versus the S&P 500, and we have a video of that that you can check out. And we're going to do the same thing this year to keep doing this. And we basically did the same exact thing that we did last year as far as picking the portfolios we wanted to track. So the first one we do is the Barron's Roundtable, which came out last week. And there was a total of 39 stocks that they picked. So we equal weight them and we see how they do. And so far this year, they're off to a pretty good start. These is en route. That was, their picks were flat last year, in the face of the S&P being up 25 chips out. But you know what? So far this year, they're doing pretty well. They're 271 basis points ahead of the S&P. So good for them. I wanted to point one thing out about this Barron's Roundtable, which is that in general, if you read it, it really had a bearish tone to it. Even their opening paragraph. Our assessment of the Barron 225 Barron's Roundtable, which featured a large group of bearish panelists and a smaller but equally committed key group of bulls. It was very bearish, I'm telling you, just an aside, but it doesn't matter. We're going to track. So far, they're doing well. The second thing that we track are the CNBC picks. They do these acronyms every year. There were a total of 38 stocks in this acronyms. And so far this year, they're also beating the S&P by 1.66%. So go CNBC. And the third one we did was we broke the Dan Nathan acronym out as a separate portfolio because Dan is our man. Love Dan and want to especially see how he does. Of the 10 acronyms last year on CNBC, his came in 10th. Dan has, it's not a personal thing against Dan, I'm sure. You know, people like him, but to me, the psychology behind the way that he trades the markets is this bad psychology. So, he likes to buy the laggards, sell the leaders, and likes to throw his macro on top of it, which for the most part is always bearish, and you can always make a bearish macro call if that's what you want to do, and he always likes to do that. So I think his habits are bad, so I want to track him especially. But Dan so far this year is crushing it. 3.4% ahead of the S&P. So go Dan, right? Prove me wrong, buddy. And then we just create random portfolios just for the fun of it. First one is alphabetical. First 38 stocks. We take 38 because there were 38 in the Barron's one. So first 38 stocks, alphabetically. Also beating the S&P by 1.74% so far this year. Hooray, random. And then we go into ChatGPT. Give us the 38 best stocks this year. ChatGPT. And they are so far beating the S&P by 3.19%. So go ChatGPT. They were the best performer last year of all of our things other than the S&P. They all underperformed the S&P. ChatGPT did best. The alphabetical did second best. The CNBC picks the third best, and Barron's did the worst. So let's see how that goes. I just wanted to set it down now, so we wouldn't come back later and be like, oh, well, you cherry picked later to show the worst ones. Now, this stuff came out this week, so this is when we did it all, and there it is. We will come back sort of every quarter and check in and see how the gang is doing. All right. So please follow along if you're interested in this kind of thing. I think if you go back and look at our year-end one last year, there were some really good observations. I think the observation here, the fact that all five of these portfolios are currently beating the S&P, quite frankly, speaks to the fact that breadth has been improving. That's really the only thing that would explain it to me. And that is, in fact, what's been happening. So anyway, we will track it as the year goes on, and always happy to hear questions and comments. And check us out, crowdedmarketreport.com. Thank you. Hope everybody's having a good year so far. Hope you have a nice weekend, and we'll talk to you again soon.